Hello, this is Ray Franklin. I'm the Senior Commodity Analyst for Energy Professionals. In today's video, I'm going to be discussing my January 18th Energy Update. In my January 4th Energy Update, I said a common pattern repeated early in bull markets is a series of higher highs and higher lows, and natural gas has been closely following this bull market pattern. As you can see in this chart, natural gas continues to follow this pattern of higher highs and higher lows. In my January 4th Energy Update, I also said if the EIA's recent forecasts are correct, then we likely are in the early stages of a rally to a higher high above $3.34. Last week, the EIA released their latest short-term energy outlook, that's the STEO, and they continue forecasting lower production and increased exports in 2021, and it will result in natural gas pricing increasing 48% in 2021 over 2020. In today's report, I'll dig deeper into the EIA's STEO and explain why if their 2021 supply-demand estimates are correct, it will result in structural imbalances that will validate the EIA's forecast that natural gas pricing will be higher in 2021. The EIA estimates that in the United States, consumption, including residential, commercial, industrial usage, and power for the generation of electricity, will decrease 2.3 billion cubic feet per day in 2021. But the decrease in consumption will be offset by their forecast that production will decrease 2.6 billion cubic feet per day in 2021. But this is only part of the story. The EIA continues to forecast that exports will increase in 2021. Their latest forecast indicates net natural gas exports will rise from an average of 6.5 billion cubic feet a day in 2020 to 9.8 billion cubic feet a day in 2021, resulting in a shortfall of supplies of 3.3 billion cubic feet a day. The combination of decreased production and increased exports in 2021 will overwhelm the expected small decreases in consumption and result in structural imbalances over the next year. The EIA estimates that at the end of 2020, working natural gas inventories were 3,375,000 billion cubic feet, which was 6% more than the 5-year average. But based on structural imbalances forming in 2021, they expect inventories will be 1,620 billion cubic feet by the end of March, which would be 12% below the 5-year average. If, as expected, structural imbalances continue in the second and third quarters of 2021, it will result in natural gas being undersupplied as we prepare for the winter heating season of 2021, and the risk of higher natural gas prices in 2021 will increase. In previous reports, I pointed out natural gas only traded below $2.50 three times, in 2001, 2012, and 2016, and it always preceded higher prices for at least 3 years. And if you look closely at this chart, you can see early in previous bull markets, they all started with similar patterns of higher highs and higher lows. Therefore, based on the EIA's recent supply-demand estimates, in the near term, I believe natural gas will remain in this present pattern of higher highs and higher lows, and likely trade above $3.34 by the end of the first quarter. Longer term, the EIA expects structural imbalances in 2021 will continue into 2022. Therefore, they estimate natural gas prices will continue increasing in 2022. If their estimates are accurate, the price of natural gas is extremely undervalued and will rise significantly from present levels both short and long term. In the near term, weather factors will influence the direction of energy prices, but the downside reward potential of lower prices short term is minimal versus the upside risk of higher prices long term. Hopefully this video helps you appreciate why it is in your best interest to secure a fixed rate at this time. And until my next report, please take care.